To become profitable in trading, it's important to be able to read and interpret indicators on multiple timeframes. Reading an indicator from multiple timeframes will provide a comprehensive view of any asset, allowing you to understand both short-term and long-term sentiment, enabling you to better time your entries and exits. To do this, traders often use multiple charts or implement a feature that allows them to switch between multiple timeframe in the settings of the indicator. However, there is actually an oscillator that allows you to monitor several timeframes by means of different look-back windows without the need to change anything. The indicator provides a slow oscillator, normal oscillator, and a fast oscillator in one overlay, allowing you to find confluence between the three at inflection points. The indicator we are discussing is called the Wave Trend 3D indicator. An indicator developed by one of the first programmers on TradingView to publish a widely used artificial intelligence trading indicator. By the end of the video, we will show you how to get this indicator, how to read it, and a secret strategy that you can start using today. To add the indicator to your chart, click on the Indicators tab and search Wave Trend 3D. It's this one by this user. Save it and add it to the chart. Now that it's added to the chart, let's view the indicator input settings by clicking this gear icon. Now, as you can see, the indicator has quite a number of options available. While this might seem overwhelming, we will keep it simple by only focusing on the main options here that we will need to adjust for our strategy. The first set of options listed here are for signal settings. These options control how the signals are processed, which are these dots on the oscillator. Go ahead and enable the Use EMA length option, which will reduce the noise in the oscillator and eliminate a lot of false signals. As you can see, after this change, the trend is a lot more smooth. The speed to emphasis option will change what oscillator line is being highlighted. You can change that to the fast or normal. We will keep this on slow for now. Next are oscillator settings and divergence detection. These options control how the waves shown in the oscillator are processed. We will leave these on default for now. Next, we want to scroll all the way down to overbought and oversold zones, and we want to enable show OB and OS zones. This will plot these overbought and oversold zones on the oscillator, which can be using for reversals and exits. Those are the only settings we will adjust for now. Go ahead and click OK. By applying this indicator to the chart, we can see how it helps to easily detect trends. This indicator is 3 oscillators of different look-back windows combined into one indicator. This bright line is the slow oscillator. The slow oscillator will act as our main trend detecting tool and is selected in the settings for emphasis by default. That can be changed to the fast oscillator or normal oscillator. These orange and blue dots are possible areas we can enter the market. These dots appear when the different oscillators converge and cross each other. You will also notice that some dots are larger than some. The larger the dot, the more significant the signal. The indicator also has these levels of overbought and oversold zones. The oscillator does not often go to these extremes, so when it does, it can be an early sign of a trend reversal, and once price gets to these levels, we can expect it to return to the zero line. When using this indicator in its basic form, we would execute a buy trade when the blue labels are plotted, as this would indicate that the different oscillators are converging and price is likely to rise. You could then use the trend to monitor your positions to get out at the first possible sign of a strong bearish signal. For sell positions, we would enter a sell when these orange dots are plotted, as this would indicate a bearish trend. However, this indicator is far more complex and should not be used just like this, as this will result in losses. Another method of using this indicator would be identifying divergences. A divergence occurs when the oscillator starts making lower lows, but price is still making higher highs. This would be a bearish divergence. Here is an example. Here we can see that while price is trending strongly in an uptrend, however, we can see that the previous waves of the oscillator has started to lose momentum. This could be the first sign that the market is about to reverse, and we can expect a move to the downside. To see this more clearly, if you go into settings, you can enable the use mirror option, and this will mirror the oscillator and allow you to see how these waves increase or decrease in size more clearly. Seeing this, you can anticipate price to go bearish, and you would be able to execute with stops above swing high and target a swing low, or hold until the oscillators run into the oversold zones. The mirror mode of the oscillator is a great way to visualize shifts in momentum. If a trader is more interested in divergences, this is a great way to use the indicator. Here is another example. As you can see, the price is in a downtrend, and at this point we could possibly seek a sell entry. However, if we look at the oscillator, we can see that this impulse is much weaker than the previous. Given this, we can execute a buy position with the expectation that price will reverse to the upside. As you can see, there are many ways of using this indicator. However, we are going to share with you a strategy that we have tested that shows great promise. But before that, don't forget to like and subscribe to not miss out on future videos. And if you would like to try the #1 premium indicator on TradingView by xauusd, you can use the link in the video description to gain access for 30 days risk-free. Your continued support really helps the channel. For this strategy, we will need one more indicator, which will help us with our stop loss. Click in the Indicators tab and search ATR Stop Loss Finder, and add it to your chart. Go into the settings of the indicator and change the multiplier to 2. Then go into the settings of the Wave Trend 3D and ensure that Use EMA option is enabled. That is all you need to adjust. The ATR Stop Loss Finder calculates the current average true range based on volatility and shows us where to place our stop loss. By changing the multiplier to 2, we are setting our stop loss at 2 times the average trading range, reducing the chances of us getting stopped out. Now here is the strategy. First, we want to pay attention to our slow oscillator, which is the highlighted line here. For bullish trades, we want this line to be maintaining above the zero line. This shows that trends of higher timeframes are likely in an uptrend. Next, we want the fast and normal oscillator to pull back below the zero line, showing that we are in a retracement. And finally, we want the fast oscillator to cross above the normal oscillator, which is an early indication that the trend is now about to exit the retracement and continue bullish. Once this happens, we want to use our ATR oscillator to set stop loss, and we want to take a 1-to-2 risk to reward ratio. Let's see how the trade plays out. For sell positions, it is the opposite. We want the slow oscillator to maintain below the zero line, indicating a bearish trend. Next, we want to wait for the slow and normal oscillator to retrace above the zero line. And finally, we want the fast oscillator to cross below the normal oscillator for a sell signal. Now we can set stop loss at the ATR value and target a 1-to-2 risk to reward ratio. Perfect. It's important to know that once you enter a position, you want the fast and normal oscillators to maintain their positions. For example, if we are in a buy trade, once we enter a position, we ideally want the fast to remain below the normal until we get back above the zero line. And in a sell position, we want the fast oscillator to maintain above the normal oscillator until we go below the zero line. If the trend switches before going back below or above the zero line, this could indicate that price is struggling to go lower, so we would exit our position and seek another opportunity. It is also possible with this strategy to hold trades longer. Once we get back above the zero line, you can hold positions based on the slow oscillator. However, there is a strong chance price will reverse significantly before you get an exit signal. For longer positions, you will need to also include a trailing stop loss. One tool which can be really helpful for this is the Signals and Overlays Trend Catcher feature. This overlay will trail price closely during entries and let you know when exactly to exit your positions, allowing you to capture more profits from your trades. As you can see here, the slow oscillator would have given B a terrible exit, but the trend catcher managed to catch a far better exit. We hope you enjoyed this video on the Wave Trend 3D Oscillator, a tool that combines multiple look-back windows in order to view the trend of multiple timeframes and have a more comprehensive outlook on the markets. Go ahead and give it a try and let us know your thoughts in the comments. If you would also like to test the trend catcher overlay used in today's video, you can use the link in the video description to gain access to the Signals and Overlays indicator by xauusd for 30 days risk-free. As a bonus, you will also receive the Oscillator Matrix and Price Action Concepts indicators. Try them for 30 days to see if it's a good fit for you. Don't forget to like and subscribe, and we will see you again next time.